Welcome to the Telltales podcast, where we discuss cash flow and its pivotal role in investing. I'm Mike Nicoletti.
And I'm Jason Wallace. Along with our co-host Hunt Lawrence, aka Mr. Cashflow, we're here to explore how cash flow drives the economy and investment performance.
And don't forget to join our email list at telltales.us to get the cash flow memo. It's about 20 pages covering 80 companies, U.S. government's finances, and the energy sector.
It's like having a masterclass on investing in your inbox every week.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Exhibit C first. As I promised last Wednesday, I went through the OPEC supply and demand numbers and the IEA numbers. Remember, the IEA is the consuming countries, an organization set up in Paris, has been there for many years to kind of offset OPEC. The IEA has come out with very conservative demand forecasts. And at least for 24, I don't see that much difference. Last week I was saying there was a big difference. In looking at the IEA numbers, I don't see it. There is another organization, REIA, I think that stands for Energy Information Authority or something. And I have those numbers with me this weekend. What I'm going to try to do is kind of confirm these 24 numbers. Both OPEC and IEA agreed on 2022 and 23, and they're pretty close on 24. I'm going to try to put down a 25 column here. The main problem still is that surplus capacity. If the government in Saudi Arabia, basically the crown, whoever advises them, decided to produce their extra 2 million barrels. You see, Saudi Arabia is just 9. They could go up to 11. And if the UAE, which is 3.4, they could probably go up by, maybe 1 million barrels a day. We would not have an $82 or $81 WTI price. But they've all been pretty disciplined, and hopefully that will continue. By this time next week, we'll have some estimated 25 numbers. Exhibit B, you see unusually low gas price for last Wednesday. I think what's happened is there's enough gas in surplus storage that participants in the market are worried about. So you're trading the August contract now. It's impacted by the September contract. And they're worried about not having enough gas in storage and, in effect, having to almost pay for putting gas in storage. So that has really hurt the August price and September price. You can see that the 25 price and the 28 price is still pretty well established. They were off 10 or 15 cents, but 25 is still 340 and 26 is 370. What has happened is that 23 dry gas production of 101.8 was running 100 for a lot of the first half of this year because two of the big producers in Marcellus, EQT and Chesapeake, had shut in a B a day each. That's come back on. So you're now running 102 or 102 and a half. So this forecast for 103 may not be too far off. The other thing that's happening is on the LNG feed gas, Beryl, amongst other things, caused Freeport to shut down. When you shut down LNG trains, it takes a while to bring them back up. So the number for LNG feed gas is going to be even lower than 13.7 forecast here. The other thing that's happened is the facility was supposed to come on and make a difference in the second half of this year. Golden Pass is owned 70% by Qatar and 30% by Exxon. They have a dispute with their main contractor, and so consequently all the workers have been sent home. So they're now talking about starting that up in 25, but they have to get through this bankruptcy. Basically what Qatar and Exxon are trying to do is get the contract back from the contractor, and the contractor, of course, is saying that their bills that they haven't paid So they want a monetary settlement. So I don't know how that's going to come forward. When you get to 25, you will have Venture Plaquemines Parish on, and you'll have Freeport back. Both Cheniere's facilities, the Sabine Pass and Corpus Christi, have additional trains. So that 17 million a day for 25 is probably okay. Power demand continues to go up more or less in line here. But despite it being warm all over, gas prices and power prices have been relatively subdued, which is a surprise. Now, the heat is going to continue, so we'll see what happens. Exhibit A needs some updating, and government does kind of publish a equivalent to a 10K, although it's nowhere near done. And I've got the 23 version, and I'll work on that this weekend. There may be some changes in the forecasted CBO forecast when you see this page again next week. And with that, unless Jason or Mike have anything, I think we ought to this week do healthcare first. We've done that the last couple of weeks because we were waiting for the last 5 minutes to do healthcare, and it was not getting much coverage. We talked about page 19 last week with UnitedHealth and Eli Lilly receiving most of the commentary. Jason, anything more there? UnitedHealth had a very difficult first half, but Eli Lilly seems to go from victory to victory. But anything more on those two companies?
UnitedHealth might continue to have a rough road ahead. So the FTC yesterday published a 70-page report outlining their argument against pharmacy benefit managers that we touched on last week. I haven't had a chance to read it yet, but it's pretty critical of their role in the healthcare system. So as background, the top 3 PBMs control about 80% of the flow of prescriptions in the U.S. That's UnitedHealth, CVS, and Cigna. So these companies determine which drugs are available to the patient and at what cost. And in all cases, it's either they're also a payer or a pharmacy. So the incentives there are maybe a little mixed, either to elevate or put you into a more expensive drug, or to maybe undertreat in order to save costs. So that's what the FTC is looking at. Their report that they published says that last year the revenue captured by PBMs was exceeded $1 trillion. So the whole U.S. healthcare spend was 4.8 trillion. So these PBMs are capturing over 20% of the flow of money in healthcare, and that's kind of why they're looking at them and looking at the incentives and if they're adding to the cost burden in the U.S., which our healthcare is extremely expensive. So the FTC hasn't taken any formal action against PBMs yet, but they've given a lot of lip service to it. So we kind of expect it to come. The looming question then is if there's a administration change in the White House, does Lina Khan remain at the FTC, and then does the appetite to go after PBMs remain then? But as today, I'd be wary about owning any company that relies on revenue from PBMs.
And I would also, when we started keeping this page, I thought, CVS, which is a conglomeration PBM, an insurance and drugstore chain, I thought, look, they're trading for 10% yield. UnitedHealth Group is come down, but it's generally a 4 or 5% yield. Why not buy the less expensive stock? But I think drugstores are having a very difficult time, so that's a negative. And they can try harder, but I don't think that you don't want to own either one of them, I guess. But you certainly don't want to own CVS because it seems to be less expensive. There are good reasons for it having a higher free cash yield.
Yeah,
Mike?
I would just add in CVS's case, of those 3 business units you mentioned, the PBM is the largest. So it's kind of, I think it's surprising when talking to people and they don't realize that generates more revenue than all of their pharmacy stores combined.
Right.
Yep. I'd call it a value trap. And then I'd also, use the generalization that sunlight is the best disinfectant. So over the course of the last year, the public has generally become more educated on this. And anytime you have an obscure and extremely complex system, either the reason is because it's very complex and maybe hard to understand. Sometimes the reason is that the more complex it is, the less people look at it and they write it off. But it's been really good. There's been some really high quality reporting by mainstream media on the PBMs. So I think this has been a positive outcome of it, and in one of the few positive actions taken by the FTC that I would support.
Right. Why don't we switch to Vertex and Lantheus, which are page 15, just for any updates. Then after that, I'd like to. We haven't added any healthcare companies. I know Mike and Jason are spending a lot of time on healthcare, so we probably ought to see what other companies they're looking at and what other trends they see that might make for good investing. But first, update on Vertex and Lantheus.
Yeah, so Lantheus had some news today, and if you're an owner, as we are, you're pretty happy today. The CMS provided guidance for their reimbursement of radio diagnostic tests going forward into 2025 and beyond. So something that's been weighing on this Lantheus's stock is the current temporary authorization for reimbursement of Pylarify. So the diagnostic scans the cost for that scan was being passed through with the billing for a PET scan. So you take this diagnostic and you receive a PET scan to image it, and that temporary authorization was expiring at the end of this year. So the question was, how will they be reimbursed going forward? It put a chunk of their revenue at risk. So what you're seeing today is that risk being removed in their share price. So definitely a positive for Lantheus. I don't have new news on Vertex this week.
Yeah. Vertex to me is a little good. It's a fraction of the size of Pfizer or Lilly or whatnot. It seems to me in terms of developments there, it's punching way above its weight, which is terrific.
I guess there was one research or a bit of preclinical data about a potential way to treat sickle cell disease with a small molecule drug. So I don't think this is like a reason to, I don't think necessarily the sickle cell treatment is a reason to own Vertex, nor is it this preclinical concept of a way to treat sickle cell a reason to sell it. But it is an opportunity to take a step back and remember that there's a lot of competition within this industry as to different ways to treat different diseases. And the concept here would just be a lot cheaper to create a small molecule drug to treat somebody for sickle cell disease than it would be for a CRISPR gene therapy. So it's something to be aware of in general. Like you could have a home run drug or treatment that something could come out of left field. So again, this thing's minimum 5 years away from having some clinical data that we could make a decision on. But it's just a broader awareness that this is the way this industry works.
I don't think Vertex is earning much revenue from their sickle cell business. I mean, it's more a kind of getting through authorization, if I recall correctly.
Yeah, I don't believe they've recognized any revenue from it. They recognize the revenue when the treatment's complete, and the whole course of the treatment, if I remember correctly, is 6 months. So they haven't had any patient fully go through that 6-month process yet since it was received approval at the end of last year.
Right. What about healthcare? I mean, if we were adding companies to this list, or this list of 80 companies, whatever we have on the 20 pages, Jason, what would be your first couple of candidates to add based on all the work you and Mike have been doing?
We've been looking at a couple smaller smaller companies. One we like is a pharmaceutical company that specializes in ophthalmic care, so medicines to treat different eye diseases. And one of their core products is a anesthetic. So it's used in a lot of cataract surgeries and different outpatient eye surgeries. So numbing the eye to perform something like a cataract surgery, and it's got a couple tailwinds in that, aging demographics, the baby boomer generation is coming into an age where they're much more likely to receive that treatment, and these guys really have the best in class anesthetic for the eye. So what differentiates them? Are we willing to give up the name, Mike?
Yeah. We've talked about it in our letters.
Okay. So the company is called Haro, and their anesthetic lasts over 20 minutes. So it can last long enough to complete a surgery without being reapplied to the eye, which reduces complexity for the surgeon. And then they have a couple other treatments, but the CEO is really an interesting story. He started the company as a compounding pharmacy, and he kind of gained fame when Martin Shkreli bought the treatment for AIDS, one of the drugs that treat AIDS, and then raised the price, I think, 1,000-fold. So this guy stepped up and said, "Hey, I'm going to make the drug and sell it for $1." So that kind of got him notoriety, but he's that kind of person, right? So he's leveraged his compounding pharmacy business into using the cash flows to start purchasing rights to different drugs, and now they're just not at the point where they're commercializing and recognizing revenue on all these investments they've made over the last handful of years.
Yeah, I think it's really interesting because not only does it benefit from demographic tailwinds, which is kind of one of the bigger picture things we look for, is like what's the underlying trend that is going to kind of be a tailwind to a company, but they uniquely among, I should say not totally uniquely, but capital allocation discipline that aligns with what we look for is really rare. And we've been really impressed with the way that these guys manage their capital allocation process.
And we're missing a fifth company on page 19. So I think we used to have Biogen there, and I get kind of tired of waiting for their work on.
I mean, I'd say that the downside to Haro is that it's already doubled since we bought it. So
downside, huh?
Well, yeah. That's the only, I mean, it would have been nice to be there earlier, but
yeah. Well, it's an interesting. It sounds like you have a real well-conditioned CEO for pharmaceuticals. I mean, it sounds like he's able to be very disciplined. So,
well, he gets cash flow, and
yes.
That's well, Jason, why don't you walk through the what's the spin out? Eaton, I believe it was.
There's been 3, yeah. Eaton, Melt, and Surface Ophthalmology. So it's interesting that, and it's something we've always thought was a good idea, and we stumbled upon this company, and they're actually doing it. So rather than funding your pipeline of preclinical research out of your current cash flow and your R&D and increasing that R&D spend as you go through all the stages of clinical studies, and it may be outside of your core competency, we always thought it'd be a better idea to spin that out into a new business, have more venture scale investors fund the much riskier biotechs, and you can gain from the upside, but you're also, the company's not taking on the undue risk of essentially a startup biotech.
Right, because think about the cash, the commitment to fund something all the way through development requires an enormous amount of capital. And in the case of a company like Haro, it would be enough to sink the company. In the case of a company like Vertex, they can finance it out of their cash flow. So it's 2 different decision sets where in a case of a company like Haro, it makes so much sense to get it off of their financial responsibility to free up cash flow for other stuff.
Right. And they retain a lot of upside. So they have equity in the business. They have royalty on the sales of the product once it reaches market. We think it's really a great model. And then in the case, so they've had 3 spinoffs. So in one of the cases, it went a different direction that wasn't core to Haro's business, and they eventually sold those shares to raise money to fund their commercialization of their own drugs. So rather than diluting shareholders or adding to debt, they were able to leverage the spin out into funding their operations.
Sounds neat. Now we're down to only 5 minutes for chips and software, the front of the memo. So we were under committing to health. Now I guess we're under committing to the front of the memo. Let's save any other healthcare ideas to we'll do one a week. Haro this week. We'll do one next week. I have a question, Jason, for you on OpenAI and Microsoft and Apple dropping out of observer status on OpenAI. That's got to be DC or Justice Department related, I assume.
Could be, yeah, or even just both parties were extremely upset that they were getting to look at each other's trade secrets. All the concerns you brought up last week were valid, and I think they had, the 3 of them came together and decided the best outcome is neither company gets to learn what the other, between Microsoft and Apple, get to learn what they're doing with OpenAI.
So who's the winner in that? You got to say it's Sam Altman.
Absolutely.
he is. I think the evil genius thing is spot on. He's really sharp. Hey,
Jason, I know you think that in the past when we've discussed OpenAI, suggested that eventually someone will buy them. It's a practical matter. It's being run as a public company, right? I mean, they have new investors come in and old investors can redeem. And wouldn't it make more sense to kind of buttress the financial controls, try to figure out exactly what the deal is with the way they originally set up as a nonprofit and get OpenAI public? Because they are generating cash flow, but isn't it going to be a while before the cash flow they generate be able to cover their expenses of developing additional versions of their language models?
Yeah, they'll continue to need to raise money. It's hugely expensive to train the new models, and I don't know if they've publicly said, but we can only speculate what GPT-5 costs. I think they need to unwind the overly complex corporate structure as well. It's already caused a huge problem with attempting to fire Sam Altman, and then all the shakeup at the board, and Sam Altman's back, and they had 3 CEOs in a week, and that all kind of boiled down to Sam Altman maybe not owning any equity in OpenAI and concerned about how he's going to be compensated, and so he started making venture investments in the name of OpenAI, but benefited him personally, and the board didn't approve of that. I think they just need to unwind that. It's overly complicated. Why it exists is, there's reasons, but they're not good reasons. I think they will solve it and will IPO. And Mike certainly believes that. And we've talked as well what happens to Microsoft. And Mike and I were discussing the agreement that they had with Microsoft, and it was, I think they didn't purchase equity in the company, but they purchased rights to revenue. I don't know. Correct me if I'm wrong, but
yeah, exactly. They have effective control, and again, I don't think it's normal equity, of course, because there's nothing normal about the structure of the deal. And then I think they get a 10% of revenue right off the top,
and then they have the right to 10 times their investment.
Right.
Yeah.
So you got to assume that at some point the numbers are big enough that it just has to go public. And you also got to assume that they're probably angling for maybe the largest public IPO capital raise of all time. I think the most that was raised was Saudi Aramco. I think it was $29 billion.
Right.
So
Mike and Jason, do you think Elon Musk with XAI can catch up, or is OpenAI? I mean, is it when we ask whether ADM can catch NVIDIA, say no, not likely. Could similar kind of question, could XAI catch OpenAI in whatever position Google has, or is it too late? Is that not likely?
I think it's fairly likely. I think the moat in these language models are how much you're willing to spend and how rapidly. So I don't think it's like a technological moat that exists in semiconductors. I think all of these are based on an open source paper out of Google. So the knowledge of how to build these models is fairly well known among the big tech companies. So I think it boils down to your access to data and how much you're willing to spend on compute today to get ahead.
I was saying, if you're Musk, you're probably looking at OpenAI, seeing their structure is going to slow them down. So I can probably catch up, and presumably they'll get the next generation GPUs as early as they possibly can. And if they have all the data that they need in order to train them to be at par or better, they've got a fairly good chance of catching up in the next couple of years. And Jason and I both agree that these large language models, assuming they're all basically trained on the same thing, they'll converge to the same solution. So, barring a fundamental design change, like transformers were a big enabler of large language models. But assuming we're on the same track, it'll converge to the same solution.
Well, a fundamental change is coming. We don't know what it is, but it'll be there. Like the language models were a big change of how machine learning and AI was done previously, or prior to that. There will be a new software model for AI that comes along, that it's better in some measurable way, or it's better at a different task, and it'll change the landscape.
Right. So if you're a college kid studying AI, hopefully you're studying something other than LLMs.
Huh. Mike, Jason, what's the chance of that that new technique coming out of something other than OpenAI, XAI, and Google?
Well, it probably won't get published this time. But part of it is not knowing how valuable it is once you discover it too, right? And the advantage to publishing is that you get other people to look at it, and Google had it and they weren't the ones to capitalize on it. So
how long ago was that paper that Google put out?
2018.
Right. Anything else, Tesla or NVIDIA or anything else in the front of the memo that is noteworthy or newsworthy this week?
Say on the EV front, for Tesla, Volkswagen's closing down an EV factory in Belgium, and BYD is setting up a factory in Turkey in order to dodge some tariffs. I think it's going to be very difficult to keep Chinese cars out of many countries in Europe because they're going to be significantly cheaper, and not all countries in Europe are as wealthy as Germany is. So it's going to cause some pains over there, I believe. But the relatively simple solution of plopping a plant down in Turkey seems like a good path forward. Similar to what we're seeing, they're planning to manufacture in Mexico as well. So don't be surprised when they try to enter the U.S. And they've already entered with buses and more industrial type vehicles. So that's all pretty exciting. I guess there's also a new version of Tesla Full Self-Driving that integrates both the highway model and the street model. So from a technological perspective, they were basically running two different operating systems for two different use cases, and now they're going to pulling it together over one model. So that's maybe less interesting from a user perspective and more that they're continuing to move down the road of better and better software.
Right. For next week, we promise another healthcare unveiling like Caro. And we also promise more talk on cars, because I think the Tesla Investor Day, or whatever it is the first week of August. So this will be a little bit like the Apple Investor Day when they announced what they were going to do with AI. So we might as well get a couple of week head start on it. With that, everyone be well and stay healthy, and we'll talk next Wednesday. Take care.
The views expressed on this podcast are the hosts alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.